You've spent a decade building the perfect financial life. You got the degree. You climbed the corporate ladder. You bought the house. You're doing everything right. Then one month, life happens. Maybe you switched banks and forgot to update your auto pay. Maybe you were traveling and the payment slipped your mind. Maybe you had a medical emergency that wiped out your checking account. Whatever the reason, you miss one mortgage payment by 31 days. Just one. That single $300 mistake just cost you over $100,000 in what I call the credit tax, an invisible, aggressive wealth destroyer that will haunt you for the next 30 years. I'm Sam, and I'm about to show you why the credit score system isn't measuring your moral character or your financial responsibility. It's measuring how profitable you are to the banking cartel. And when you miss one payment, the algorithm executes you financially without mercy or appeal. By the end of this video, you'll understand why one missed payment isn't a minor inconvenience. It's a financial execution that will cost you your retirement fund. Let's start with what actually happens the moment you hit 30 days late on that mortgage payment. Your credit score doesn't drop by 10 points or 20 points. According to LendingTree, if you have excellent credit, let's say a 780 score, a single 30-day late payment can tank your score by up to 180 points. 180 points from one mistake. You go from excellent to fair overnight. Your 780 becomes a 600. And here's the brutal part. The algorithm doesn't care why you were late. Medical emergency? Doesn't matter. Job loss? Irrelevant. Bank error? Not its problem. Identity theft? Too bad. The algorithm is binary. You either paid on time or you didn't. There's no human reviewing your case and saying, oh, they had a legitimate reason. It's just cold, ruthless code executing a financial death sentence. And that stain? It stays on your credit report for 7 years. 7 years of paying what I call the credit tax on every financial transaction you make. This is what I call algorithmic execution, the replacement of human judgment with code that treats you like a number, not a person. Stop. Let me show you how this is different from the old system, because understanding this will change how you see lending forever. 30 years ago, you'd go to a local bank. A human would review your application. They'd see that you've been a customer for 10 years, that you had a medical emergency, that you've never missed a payment before. They'd make a judgment call and work with you. Today, there's no human. There's just an algorithm that says missed payment equals high risk. Here's how insane this gets. That algorithm will now treat you, a responsible person with one late payment due to a medical emergency, as more dangerous than someone with a drunk driving conviction but an 800 credit score. The drunk driver gets the 6% interest rate. You get 7.5%. Because of the algorithm, your 600 score is riskier than their 800 score, regardless of the fact that they were literally driving drunk while you were in the hospital. This is algorithmic ruthlessness, and it's about to cost you everything. Now let me perform a forensic audit on what that one missed payment actually costs you. This is where the numbers get absolutely brutal. You're buying a $400,000 house with 10% down. That's a $360,000 mortgage. Before the missed payment with your 780 credit score, interest rate 6%, monthly payment $2,158, total interest paid over 30 years, $417,000. After the missed payment with your 600 credit score, interest rate 7.5%. Monthly payment $2,517. Total interest paid over 30 years, $546,000. The difference? $129,000 in additional interest vapor over the life of the loan. Let me say that again. One missed $2,158 payment costs you an additional $129,000 in interest over 30 years. You're buying the exact same house, the same roof, the same walls, the same patch of grass, but you're paying $129,000 more simply because an algorithm from 1989 said you're now risky. That extra $359 per month for 30 years, that's your credit tax. That's the price you pay for one mistake that the algorithm never forgives and never forgets. But wait, It gets so much worse because that $129,000 in extra interest payments isn't just money you're losing, it's opportunity cost, money that could have been compounding in your favor instead of evaporating to the bank. Let me show you what happens if you had invested that extra $359 per month instead of sending it to the bank as your credit tax. $359 per month invested in the S&P 500 at 10% average annual returns over 30 years becomes $753,000. $750,000. That one missed payment didn't cost you $300 in late fees. It didn't even cost you $129,000 in extra interest. It cost you $753,000 in wealth you could have built. One mistake. One algorithm execution. $753,000 stolen from your future. This is the credit tax in its full, brutal reality. You're not paying a penalty. You're paying for a 30-year wealth extraction machine that never stops grinding. Now let me show you something even more insane, because the credit tax doesn't just hit your mortgage. It infects every corner of your financial life like a virus. Auto insurance. Your car insurance company looks at your credit score and decides how much to charge you. Studies show that drivers with poor credit pay an average of $1,500 more per year in insurance premiums than drivers with excellent credit. Here's the insane part. A driver with a DUI conviction but excellent credit will pay less for insurance than you with your 600 score and a clean driving record. Let me repeat that. The algorithm believes that your one missed mortgage payment makes you a worse driver than someone who drove drunk. You are literally paying double the premium of a drunk driver because of a credit score. Over 30 years, that's another $45,000 in what I call the poverty premium, the extra cost of being labeled risky by the algorithm, even when you're not. But it doesn't stop there. Apartment rentals. That 600 score means landlords see you as high risk. You'll need to pay double security deposits or get rejected entirely, while someone with an 800 score gets approved instantly. Utility companies want electricity and water in your name? That'll be a $300 deposit because your score says you might not pay your bills. Never mind that you've paid every utility bill on time for 10 years. The algorithm doesn't care about your history. It cares about that one mistake. Job applications. Some employers run credit checks. A bad score can disqualify you from jobs in finance, management, or anything involving trust. You missed one mortgage payment, so clearly you're untrustworthy. Cell phone plans. Want the new iPhone on a payment plan? Denied. Your 600 score means you need to pay $1,200 up front, while the 800 score person gets it for $0 down. This credit score isn't measuring your financial responsibility. It's a reputation score that the entire financial system uses to judge your value as a human being. And here's the really twisted part. Let me show you what this score actually rewards. The credit score loves debt. It rewards you for staying in the debt cycle, for keeping balances on credit cards, for taking out loans and paying interest to banks. You know what it hates? People who pay cash, people who pay off loans early, people who don't participate in the banking ecosystem. If you pay cash for everything, your score is terrible. If you pay off your mortgage early to save interest, your score drops. If you don't have credit cards, you're invisible to the algorithm. The score isn't measuring financial responsibility. It's measuring profitability to banks. It's a loyalty program where the reward is permission to access credit and the penalty for not participating is financial exclusion. You're being judged by how much money you make banks through interest payments, not by how well you manage your money. This is why I call it a reputation score for the banking cartel, not a responsibility score. Now, let me tell you how to dominate this system instead of being destroyed by it. The goal isn't to boycott the credit score. You can't. It's too embedded in the financial system. The goal is to manipulate and dominate the algorithm so it works for you, not against you. Here's your defense strategy. Step 1. Automate everything. Set every single bill, mortgage, utilities, credit cards, subscriptions to auto-pay the minimum payment. Not the full balance, just the minimum. Why? because the algorithm doesn't care if you pay the minimum or the full amount. It only cares if you paid something by the due date. Paying the minimum on time gives you the same credit score boost as paying the full amount. This is your 15-second routine. Spend 15 minutes right now setting up autopay on everything. Never let forgetfulness cost you $100,000 again. Step 2. Keep old accounts open. The algorithm rewards length of credit history. Your oldest credit card, never close it, even if you don't use it, even if there's an annual fee. That $95 annual fee is cheaper than the interest rate increase you'll get from shortening your credit history. Step 3. Stay under 30% utilization. The algorithm watches your credit card balances. If you use more than 30% of your available credit, your score drops. Keep balances low, pay them off monthly, but don't close the accounts. Step 4. Audit your report. 1 in 5 credit reports has an error. Go to annualcreditreport.com and check all 3 bureaus. Dispute any mistakes. One error could be costing you tens of thousands. Step 5. Build your liquid empire in the background. While you play the credit score game, build real wealth in assets that don't depend on algorithmic approval. Index funds, investment accounts, liquid assets that compound at 10% while the algorithm watches your payment history. The credit score is a game you have to play, but it's not the real game. The real game is building a liquid empire that gives you freedom regardless of what some 1989 algorithm thinks about you. Here's the truth they don't want you to know. The algorithm needs you more than you need it. Banks make money when you borrow. The algorithm exists to determine how much interest they can extract from you. A perfect 850 score means you're the most profitable customer. A 600 score means you're even more profitable because they can charge you higher rates. You're not failing when you have a lower score. You're just less profitable to them at that exact moment, and they're punishing you for it. So dominate the algorithm, automate payments, keep utilization low, never miss a due date. Play their game while building real wealth behind the scenes, because one missed payment can cost you $100,000 in credit tax and $753,000 in opportunity cost. But perfect execution costs you nothing and protects your entire financial future. So here's what I want you to do right now. Go to annualcreditreport.com and audit your report. Find errors, dispute them, then set up autopay on every single bill, and calculate your own interest vapor. If you have a lower credit score, figure out how much extra interest you're paying on your mortgage, car loan, and credit cards compared to someone with excellent credit. That's your credit tax. Drop your interest vapor calculation in the comments. Let's build a database of how much this system is extracting from regular people. You're not behind if you made one mistake, but you will be if you let that mistake compound into $100,000 in lost wealth. Dominate the algorithm, stay organized, build your liquid empire, and never let a computer program from 1989 control your financial future. If you enjoyed this video, hit the like button, drop your interest vapor calculation in the comments, and if you'd like to know more about real estate forensics and financial systems, hit that subscribe button, and I'll see you on the next one.